All right, good morning, everyone. Welcome to the Committee on Finance. We have a quorum, and the Committee on Finance is hereby called to order. The time is 10:10 on Tuesday, December 7th, 2021. And pursuant to applicable law, my determination that attendance by remote means is necessary because an in-person meeting is not practical or prudent due to the declared public health disaster caused by COVID-19. This subject matter meeting is conducted by video conference. For questions during the meeting, please use the raise your hand function. If you wish to make a point of order, point of information, or clarification while one of your colleagues is speaking, please use the raise your hand function or unmute your microphone. We will now have a roll call to establish quorum. Please unmute your microphone when your name is called. And please note that a yes or present will be deemed, well, we're not having a vote, so we don't have to worry about that. But let me go through the roll, and we will start out with Vice Chair Hairston. Alderman Hopkins.
Present.
Alderwoman Dowell.
Here.
Alderwoman King. Alderman Sawyer.
Here.
Alderman Mitchell. Alderwoman Harris. Alderman Beal. Alderwoman Sadowski Garza.
Present.
Thank you. Alderman Thompson.
Here.
Yeah. Alderman Cardenas. Alderman Quinn.
Here.
Alderman Burke.
Here.
See you. Alderman Lopez.
Chairman.
Alderman Burke, I
Chairman.
got you. Alderman Moore.
Present.
Alderman Curtis. Alderman O'Shea.
Here.
Alderman Brookins. Alderwoman Tabaris. Alderman Scott. Alderman Burnett. Alderman Irvin, I see.
Yeah, Alderman Irvin is present.
Thank you. Alderman Taliaferro. Alderman Raboris.
Present.
Alderman Austin. Alderman Villegas.
Present.
Thank you. Alderman Mitz. Alderwoman Mitz. Alderman Sposato.
Nick Sposato is present.
Alderman Napolitano. Alderman Riley.
I'm here.
Thank you. Alderwoman Smith. Alderman Tunney. I see is present.
Present.
Alderman Osterman. I see there.
Present.
Thank you. And Alderwoman Silverstein.
Present.
Thank you. Ladies and gentlemen, we have 21 members present.
Chairman, Alderman Scott's present.
Oh, Alderman Scott, actually 23. Alderwoman Vice Chair Hairston. Thought I saw you pop on there. All right. And I see Alderman Mitchell, I have you there. Alderwoman Coleman, Laspada, Rodriguez. Anybody I'm missing there? Let's see. All right. Well, ladies and gentlemen, we do have a quorum, and I appreciate everybody's patience this morning. We have two agenda items today, and the first one is going to be on municipal depositories, and we have several people here to testify. The second item will be on Alderman Raboris's commercial property resolution. And we have the Cook County Assessor who you'll be able to ask questions of and how he handles things. But first, we have one public speaker. And the public speaker that signed up today is Farzan Parang. And then we'll go on to the discussion of the responses for the RFP for the municipal depositories. And our first public speaker, ready?
Chairman, can you hear me?
Yes, go ahead. Go ahead, Farzan.
Thank you, Chairman and members of the committee. My name is Farzan Parang. I am the Executive Director of BOMA Chicago. We wanted to have a conversation about the property tax assessment resolution with this body and with the City Council as a whole. Our association participates in a broad coalition of business, labor union, and taxpayer protection organizations that are heavily engaged on the issue of property tax assessments throughout the city and county. Assessor Kagi has been clear that he intended to target the business community across Cook County, large and small, and he has. We are very concerned with current assessment practices and how they affect property tax bills, and there is significant misinformation about both. We'd love to talk with the committee about our research on these issues, including what the assessor's IAAO study means and what has happened since the 2019 period it covers, but it won't fit into the 3 minutes we were given today. We also think it's vitally important that you hear directly from the businesses across the city that are struggling to keep their doors open in the face of COVID, crime, and rising assessments, but they can't be assembled on this meeting's short notice and during peak holiday season. We would appreciate the openness of the chair to providing those businesses an opportunity to participate in this discussion as panelists at another hearing in January. We look forward to having a conversation with you and sharing how the current assessment process impacts Chicago's economy and, in our view, is harmful policy for all of us as residents. Thank you all, and best wishes for the holidays and a Happy New Year.
Thank you, Farzan, for speaking today, and we do look forward to continuing the conversation with you and BOMA. We're going to start out today with the municipal depositories, and these are subject matter hearings, ladies and gentlemen, so we won't be taking any votes. But for the municipal depositories, we have the City Treasurer, Conyers Irvin, Comptroller Sony. We have Ben Jackson from the Illinois Banking Association, Horatio Mendez from the Woodstock Institute, Anthony Simpkins from Neighborhood Housing Services, and then we'll finish up with Alderman Ostermann on this agenda item. And we do have members of some of the banks here today that would be able to, not everyone, but some would be able to answer some questions. So I think we'll open it up for discussion. But first, before I go there, my Vice Chair, Alderwoman Hairston, is present.
Thank you.
And let's see if I have any other hands up.
Alderman King is present.
Alderwoman King is present. Thank you. And I think that was it there, but I'll watch out for anybody else that comes in. So let's start the discussion with the City Treasurer, Melissa Conyers Irvin. Are you ready?
Yes, good morning, sir.
There you are. Okay. Well, thank you for being here today, and I'll hand the floor off to you to make comments on the municipal depositories.
Good morning, and thank you, Chairman Wagasback, and certainly all the aldermen present and the guests on this morning. I just wanted to take just a few minutes to provide an update. First, certainly, I'd like to recognize the hard work of not only this committee, the Finance Committee, but also Chairman Ostermann and the Committee on Housing and Real Estate, along with the council members on this effort to really keep equitable lending for residents at the forefront of the city's agenda. And I would be remiss if I did not thank Comptroller Sony and the Department of Finance for their hard work. As most of you know, the Treasurer has not traditionally been a part of the municipal depository RFP process. But I think that we all recognize that if we want different results, we have to do different things. And I do believe that this partnership with myself, the Department of Finance, and all of City Council will continue to move progress forward and ensure that Chicago not only does right by its citizens and small businesses, but also really that we set an example for other municipalities looking to create a more inclusive, equitable lending environment. As we all know, access to capital is the key really to economic development in our city and to building generational wealth for our residents. So the Chicago Lending Equity Ordinance that was passed by this council just this year focuses on increasing transparency and public input in selecting the city's municipal depositories with the overall goal of increasing equity in mortgage lending. Now, the overarching goals are to expand the opportunity for smaller banks and credit union associations to become municipal depositories within the city of Chicago, and increase municipal depository investment in our local communities with an emphasis on underserved communities that currently lack access to capital. Under the new process, our office has really taken a larger role than in years past. Now, along with the Department of Finance, I wanted the council members to know that our office has conducted direct outreach to nearly 50 banks. And by the way, thank you to the aldermen that provided contacts to us for us to reach out to the local banks within your wards. Now, in a moment, you're going to hear from Comptroller Sony, and she'll review the list of institutions that actually responded to that RFP process. Now, you may be surprised that even after the change of collateralization from 102% to 100%, even after the lending equity ordinance that was initialized this year and passed by City Council, even after we personally reached out to the smaller institutions, we still did not receive the responses from the smaller banks as we would have hoped. We do believe that education has a lot to do with it. And also within our meeting of the Municipal Depository Task Force, we discussed inviting the smaller banks in for a discussion with us so that we can truly understand what the hesitation is. So please understand that we will not stop at this. Even while we continue to peel back the onion and understanding what about this process, over 50 years old, has discouraged banks that we want to attract from applying to become a municipal depository. So also today we have, I know, the Illinois Bankers Association on the line and some of its members at this hearing. Certainly we look forward to hearing from them. And we know that all of this is new based upon the lending equity ordinance, that we actually have these institutions at this hearing on today. Now, this year also marked the first time that banks were asked to submit a number of things with their RFP responses, including the mortgages that were denied, the reason for those denials, the racial demographic breakdown of their lending and denials. We also asked banks to submit the locations of each of their branches in Chicago, because we know that many larger banks have been shuttering branches in majority Black and brown neighborhoods for years. So our office has really taken part in this. We look forward to really figuring out what else we can do to encourage smaller institutions, credit unions to be a part of this process. And certainly even with the information that we receive back from these banks that are on today, we have provided this data so that it can be reliable and transparent. And we provided this data, which is available on the Department of Finance website, as well as the City of Chicago data portal for residents to be able to see how banks are being measured. Thank you, Chairman and members of the committee, and look forward to further discussion.
Thank you, Treasurer. Appreciate that. Alderman Beal, I have you present for purposes of quorum. Wasn't sure if I caught you earlier there.
Thank you, Mr. Chairman.
Alderman Burnett is here.
Thank you, Alderman Burnett.
Cardenas is here.
Okay, got you. Let me just double check there. All right, thank you, gentlemen. Next up, we have Comptroller Sony.
Thank you. Good morning, Chairman Wagstaff, Vice Chairman Hairston, and members of the Finance Committee. Thank you for giving me the opportunity to address the committee regarding the Municipal Depositories RFP process. I also want to thank Treasurer Conyers-Irvin and her office for the ongoing collaboration, and the Department of Housing for their assistance in this process. The lending equity ordinance was passed earlier this year, as the Treasurer mentioned, based on the work of this committee and working with Alderman Ostermann, Chairman of the Housing and Real Estate Committee. This year, the Department of Finance, along with the Treasurer's Office, issued the RFP on September 30th on our website, and we publicized the RFP in the local newspaper under the new requirements of the lending equity ordinance. To ensure that local banks were aware of the RFP issuance, the Department of Finance and the Treasurer's Office worked directly and contacted 48 banking institutions to inform them that the RFP had been issued. We also worked with the Illinois Banking Association to ensure that banks were aware of the requirements. The RFP was out for 7 weeks, and the following 11 banking institutions responded: Amalgamated Bank of Chicago, Associated Bank NA, Bank of America National Association, BMO Harris Bank NA, Citibank NA, Fifth Third Bank National Association, JP Morgan Chase Bank NA, PNC Bank National Association, the Huntington National Bank, Wells Fargo NA, and Zions Bank Corporation National Association. These RFP responses are posted on the Department of Finance website, as the Treasurer mentioned, and a link has been sent to the committee members by the Committee on Finance. The Evaluation Committee, consisting of members from the Department of Finance, Treasurer's Office, and the Department of Housing, has been formed and is in the process of reviewing the RFP submissions. The submissions will be formally submitted to the Committee on Finance and presented in the December 13th meeting. I would like to thank you all for your time this morning and for your continued partnership. I'm happy to take any questions you may have.
Thank you, Comptroller. Before we take questions, we'll go to Mr. Mendez from the Woodstock Institute.
Good morning, everybody. My name is Horacio Mendez. I'm the president and CEO of the Woodstock Institute. I'd like to start by commending the City Council on multiple fronts. The first are its attempts to increase the number of smaller depository institutions that the city can support through the municipal depository process. The second is to ensure that the city does business with depository institutions that align with its values through the introduction and passage of the Lending Equity Ordinance, or the LEO. As it relates to the municipal depository process, and speaking from experience, applying can be complex and time-consuming, and this was true before the LEO. When I worked for a $15 billion US subsidiary of a European bank, we discussed the costs and benefits of applying to be a municipal depository, and the combination of having to set up new data collection and reporting processes in order to have a marginally profitable relationship wasn't sufficient to justify the process. When I was at a much larger global institution, it was a no-brainer. We had the systems and the people in place to handle any and all forms of requests, including responsible banking ordinances like the LEO, with a hope that it would increase our chances of doing big deals for big cities, which is a payday smaller institutions simply don't have access to. Being on the other side of the fence now, we think it would be a great idea to explore the creation of a program where a city agency that's not involved in the procurement process itself, or one or more nonprofits under contract with the city, could provide technical assistance to banks that are interested but hesitant to apply. Banks and nonprofits provided similar types of services to small businesses under the federal Paycheck Protection Program. The city treasurer is also offering to provide similar services, and we fully support that idea. As to our general expectations regarding the performance of depository institutions doing business with the city, I want to try something different that isn't very characteristic of the Woodstock Institute when it comes to discussions about banks. I'm going to be nice. Now, before I'm nice and freak everybody out, I'd like to set some context. The excellent work by WBEZ and City Bureau showed us that banks need to work harder to find ways to originate mortgages in low and moderate income and minority communities of Chicago. We're proud of the steps that have been taken at the state level with the passage of the Illinois Community Reinvestment Act and the steps you've taken at the city with your lending equity ordinance that aim to close that gap. Now, with the current data we get from the federal government and what we'll be getting as a result of the LEO, we'll be able to work with alderpeople to identify the metrics for lending activity in the city that you find the most useful. If you tell us what those metrics are and what you want, we can provide the analysis and rank the institutions accordingly. With that said, we came up with our own quick assessment and rankings that include both home mortgage lending and small business lending to paint a pretty good picture of who is doing an above average job in helping our economy thrive. I provided some slides beforehand, so I'm hoping that they'll be available to show right now. I'm not sure whether or not they can. Okay, there we go.
Yes. Yep.
So on the first slide, we see which depository institutions were performing above average and making loans to businesses with annual revenues less than $1 million, which is pretty much the common benchmark for defining small businesses. The banks on this chart represent 93% of loans by depository institutions to small businesses in Cook County. Now, low income is defined as 50% or below of area median income, while moderate income is between 50 and 80%. Let's move to the next slide, which focuses on mortgages. The banks listed here represent about 3/4 of all mortgage lending by depository institutions in Chicago. These are the 7 that performed above average as it relates to the percentage of mortgage loans they originated to minority borrowers. And in this presentation, we define minority borrowers as those who identify as Black, Latino, Asian, Indigenous, or Native American. In the next slide, we focus on the characteristics of neighborhoods by income level. Here we take a look at the 5 depository institutions that performed above average as it relates to originating mortgages in low and moderate income census tracts. Now the slide speaks for itself, but for example's sake, let's take a look at First Midwest Bank. 1 out of every 8 mortgage loans they originated were in a low income census tract in Chicago. Compare that to the average of 1 out of every 13. And about 1 out of every 4 were in a moderate income census tract where the average was about 1 out of every 5. The next slide shows us a percentage of mortgage originations being made in census tracts where minority borrowers are in the majority. Now, all of the 8 depository institutions on this slide come in at above the 39.5% average of mortgage loans in majority minority census tracts. So here's the big finale. Even though we acknowledge that the average depository institution serving Chicago isn't doing as good a job as many of us would expect, there are quite a few that are performing above the average. Now, our ultimate goal is to see that average increase year over year. With that said, we wanted to see if there were any institutions that performed above average on all 4 of our analyses. An area of performance we decided to call the Goldilocks zone because it's just right mix of mortgage and small business lending performance. And as you see, we have a winner. The last slide shows the only bank that performed above average on all 4 of the sectors we analyzed was Citibank, with First Midwest Bank coming in second with 3 out of the 4 sectors, and a tie for third between PNC and Fifth Third banks with above average performance in 1 mortgage sector and the small business lending analysis. Our hope is that this kind of analysis and public discussion, along with the added information provided by the LEO, can set a baseline of performance that we can use to assess and highlight those depository institutions that are performing better each year. Our ideal is to have each institution aiming to be in that Goldilocks zone, and for you to have clarity regarding how these institutions are performing when you make decisions regarding who the city should be doing business with. Thank you.
Thank you, Mr. Mendez. And we'll make sure that if those are updated, we'll get them out to the city council so they can take a look again on their own. And next up, we have former city colleague, Anthony Simpkins from Neighborhood Housing Services.
Morning, Mr. Chairman and members of the committee. My name is Anthony Simpkins, and I am President and CEO of Neighborhood Housing Services of Chicago. As you all know, NHS is focused on working with residents and communities to make the dream of homeownership a reality and to create thriving neighborhoods of choice across our South and West Side communities of color. For over 45 years, we've served nearly 250,000 households, lending over $675 million to people to buy, fix, and keep their homes, saved 10,000 homes from foreclosure, and helped over 6,600 households become new homeowners. Investing an average of $35 million in both loans and grants in Chicago neighborhoods every year, NHS generates nearly $10 million in additional local economic stimulus and activity in those neighborhoods on top of our direct investments. That's what access to homeownership and the lending that makes it possible can do for neighborhoods. That's why the question of how banks are lending and investing in our neighborhoods is so important. That's why it was so important that the City Council passed the Lending Equity Ordinance, which requires banks seeking depository status to be transparent about their lending and investing in Chicago neighborhoods. And it also mandates this hearing where members of the City Council and the public can examine and discuss that data. Los Angeles, DC, Philadelphia, Cleveland, Minneapolis, San Diego, Boston, and Pittsburgh all already have such an ordinance that mandates the disclosure of the same kind of data. So it's commendable that Chicago has caught up with its peers. And we definitely want to thank Mayor Lightfoot and Department of Housing, Chairs Osterman and Wagasback, and City Treasurer Connors Irving for their efforts to make this a reality. This is really, really important. We had some slides also. Are those available?
Let's check and see. Should be able to get them up there.
Okay, great. While he's doing that, as a homeownership focused organization, NHS wanted to take a closer look at the retail mortgage lending data that was available.
There you go.
Great, thank you so much.
I think, let's see. I think you can read it, the first slide for sure, but we'll see how the big next one is. Go ahead.
Okay, great. Thank you. Thanks a lot. So with regard to the data, that data shows that that alarming disparities persist in bank mortgage lending in Chicago between white neighborhoods and Black and brown neighborhoods. If you can move to the first slide, that would be great. As you can see in this first slide, in 2019, nearly every bank except Citibank and First Federal Savings made more mortgage loans in majority white neighborhoods in Chicago than neighborhoods of color. Kudos to First Federal and Citibank, by the way. Their peers have a long way to go. If we could go to the next slide. Every bank, so now this slide looks at the amount of mortgages. The first slide looked at the percentage of mortgages. As we can see from this slide, every bank except, again, First Federal Savings Bank lent far more in total mortgage volume in north side and central area neighborhoods than on the south and west sides. One of the key statistics with respect to mortgage lending is mortgage application denial rates. That's basically how many people who apply for mortgages get turned down. We can move on to the next slide. We can look at 2019 Home Mortgage Disclosure Act, or HMDA data for depository bank applicants here. The deadline for the data that they had to provide in response to the RFP was very close to the date of this hearing. So there really wasn't sufficient time for NHS or Woodstock to analyze and incorporate much of that data, but it's consistent with the 2019 HMDA data. In the future, the city may want to consider amending the timeline a bit of the RFP process to provide adequate time to analyze the data that's provided by the depository bank applicants in advance of this hearing. But as the slide shows, even when you adjust for factors like income and credit, Black and brown mortgage applicants are denied at a higher rate than white applicants. The graph pulls data from the 2019 HMDA data again, showing that mortgage denial rates by race and income, Black applicants, for example, even with higher incomes over $180,000 annually, are still being denied at a dramatically higher rate than white mortgage applicants, even when they are making large down payments over 20%. And we can move to the next slide, which basically shows that the same is true for Latino mortgage applicants as well. Next slide. So a bulk of the mortgage lending in Chicago by major lenders is refinancing. We show this chart is 2019 data on refinancing denial rates by race. Again, as we can see from this 2019 HMDA data, we see the same disparities in refinancing between Black and white home mortgage applicants. Black borrowers are denied mortgage refinance loans on average 30% of the time, far higher than the overall denial rate of only 17%. If we move to the next slide, we can see fairly similar data when it comes to Latino mortgage refinance applicants as well. So why does this matter? What's the impact, say, for instance, on African-American neighborhoods? Research from the Institute on Housing Studies shows that predominantly Black census tracts in Chicago saw a loss of homeowner households between 2010 and 2019. The number of owner-occupied households in Black neighborhoods dropped 13.6% compared to only a 2.8% decrease citywide. Neighborhoods such as Austin and Inglewood are losing homeowners, and with them, Black residents, including many middle-class Black families. They're losing access to the economic power of homeownership simply because Black applicants can't get mortgages. That means they're losing patrons to support local businesses, they're losing children to attend local schools, neighbors to create community, and a loss of the ability of families to create a legacy of generational wealth. What's the impact on Latino communities? The Latino population in Chicago, on the other hand, has actually increased. But that increase in the Latino population is almost entirely among renters, not homeowners. In Chicago, renter-occupied housing represents the majority of Latino-occupied housing at almost 60%. These families are, however, at a higher risk of housing insecurity and displacement in the face of rising rents and a declining supply of affordable housing in Chicago. And they're also being denied the wealth building power of homeownership. Ironically, homeownership is in fact affordable housing. The average family can now pay less per month on a fixed rate 30-year mortgage for a house than they would pay for rent on a comparable house or an apartment. This August, the Office of the Inspector General published an audit highlighting some of the problems with the city's RFP process for depository institutions. Through the RFP, though the RFP process does require lenders to disclose certain information on their lending practices, there's no substantive evaluation being done of this information. Due to a lack of cooperation between the City Council, Department of Finance, Treasurer's Office, the OIG report said, banks have been able to continue doing business with the city while engaging in equitable lending practices across Chicago, especially in Black and Latino neighborhoods. This new lending equity ordinance provides the data and the opportunity to engage in a conversation about that data to help us understand where things stand today. What are these banks doing? And what needs to be improved to ensure equity in mortgage lending and investing in Chicago's communities of color, and equal access to the opportunity for all Chicago families to have neighborhoods in which they can thrive. As this data shows, by and large, our depository banks have a lot of work to do in this regard. Thank you.
Thank you, Mr. Simpkins. Before I go to Alderman Osterman, we're going to have Ben Jackson from the Illinois Bankers Association. He's the VP of Government Relations, and he will speak to this as well. And I know that they've been communicating and trying to give input on this as well. So Ben, are you ready? Mr. Jackson? All right, maybe, let's see, give him a second, but we might go with Alderman Osterman. Before we start on that, I do want to point out, as Mr. Simpkins said, you know, there was a third quarter report with the Inspector General did a preliminary audit of the municipal depository designation process. And in that, the OIG found that DOF, City Council, and the Treasurer's Office had not coordinated their efforts, and that's a quote from them, to achieve the city's objective of encouraging equitable banking practices. And I think what happened there was they were looking at what happened prior to COVID and essentially prior to the new administration, which includes in this section, Treasurer Conyers-Irvin, who was very helpful in teeing this up, Alderman Osterman, members of the City Council and Department of Finance through the Comptroller's Office, and then the organizations that we have here today. I think we've finally seen, working on this issue for over a decade, finally seeing action in the sense of this ordinance. So I'm going to hand it off to Alderman Osterman, and if Ben pops back on, we'll have him speak during the discussion. And I also want to point out, as part of this conversation today, we did have 9 banks that, or actually, sorry, 8 that were able to show up today with representatives. And I think that says a lot too, because in the past, we always, attempted to get cooperation and proactiveness on this type of matter. And I want to thank them all for showing up today and being available for questions. So with that, I'm going to hand it off to Alderman Osterman.
And Chairman,
Oh, yes.
Chairman,
City
I'm on the
Treasurer, go
phone
ahead.
now with Ben. I just wanted to say this while Chairman Osterman speaks.
Sure.
And he's saying that he can't unmute or take off his video, and I don't know why, because I see him as a witness here as a panelist. So I don't know if there's someone he can contact to maybe walk him through it, or someone
Yes.
to contact him.
Kamal, could you check on that for us?
Thank you.
Yes, Chairman.
I'll have Alderman Osterman hold just 1 second, please, and I'll see if he can. All right, it looks like he might have been bumped up. Ben, are you there?
Chairman, I think he left the meeting. He's probably going to join back again.
Okay, well, why don't we just go with Alderman Osterman, and then when he pops back on, we'll go back to Ben Jackson from the Bankers Association. Alderman Osterman, go ahead.
Chairman, I just want to thank you, and I want to thank everyone who's been a part of this process. And I want to talk about, I think, the process that I think it's important that we're even having this conversation about this data and this information. I think this is something that in the past was rushed through, and a lot of the information was not as transparent to all of us as possible. So I think I look at this as kind of a beginning point, and I want to commend our Treasurer, Melissa Conyers-Irvin, for all of her work on this issue, as well as the Controller, Rich Missoni, and the members of the City Council. I don't think that any of us expected overnight patterns of lending that have not focused on supporting Black and Brown communities to change overnight. But I think it's important that we have transparency about where the lending is going with our partners, the banks. And I think that I think this data that we're going to collect, I think that has been highlighted by Mr. Simpkins and Horatio. That information, the members of the City Council and the Finance Department can look at and use to try to gauge how the banks who are doing business with the city are making progress in a right direction or in a wrong direction. So I'm optimistic in that we can use this information moving forward to really try to help increase lending in communities in the South and West Side and African American Hispanic communities. Yesterday, some of us were with Mayor Lightfoot as she announced over $100 million in tax credit lending to provide rental and home ownership throughout the city of Chicago, but in primarily Hispanic and African American communities. Government doing its part is one thing, but it's critical that we have lenders that are doing their part. And I think that the ordinance that we passed this fall, the data that we have before us that we, I think, continue to work to analyze is going to really help illuminate how we can move our city forward in a more equitable way. And to the banks that are on the call, I think everything that you do every single day in our neighborhoods is going to be a guidepost for us on the work that you do. And I think that this ordinance that we have in place, the data that we now have, I think the controller and the city are working to have it more, for lack of a better term, user-friendly through a data portal, which will come. I think all of that's going to be important for all of us to kind of gauge how we're doing moving forward. I think we passed the ordinance in the fall. The RFP went out. I think that timing over looking at this data over the course of the next couple of weeks and beyond, and then kind of linking up when we do the RFP next year to provide more time for analyzing this data, I think is in everyone's interest. So I think that's something that we can work on collectively. But I'll just say that I'm appreciative of everyone that we're having this conversation and really looking at how we can have our partners that we're making deposits to do what they're supposed to do. So this is a work in progress, but one that I think all of us are deeply committed to.
Thanks, Alderman. Ben, are you available yet? Ready there? Well, before we see if we can get Ben Jackson on, I want to recognize Alderwoman Mitz, Alderwoman Austin, and Alderman Napolitano. Present for purposes of the record. And Kamal, how are we looking there with Mr. Jackson?
Chairman, I don't see Ben name in here unless he logged in as different name. Like I see just the name City.
Yeah, that's what I see that as well. Well, you know what? We will, Alderman Curtis, I see you available there too for purposes of quorum. Why don't we go to questions for the witnesses that we have here? And then I will, as soon as Mr. Jackson hops on, we'll have him speak, and then people can ask him questions as well. All right. So use the raise your hand function. All right, Alderman Laspada, you have a question?
Yes, thank you so much, Chair. I really appreciate this conversation. I really appreciate your leadership and Chairman Ostermann's leadership on this issue and getting this data to us. And also my thanks to, I think Woodstock is with us. I see that NHS is with us on the analysis of this data. And I hope we see further analysis through council on this, because the transparency is one thing. The other thing is we've shared is making the data presentable in a way that it's accessible and understandable, not only to council, but to our constituents as well. I wanted to ask, as it was shared, we have banks that are with us today, if they wanted to also respond to the initial analysis that we see from Woodstock and NHS, particularly when we see data that even when you adjust for income, when you correct for income, we're seeing refinancing loans denied at a higher rate to Latinos, when we're seeing higher rates of denial for Black Chicagoans. If there's an analysis that speaks to that, and also if they can speak to corrective measures that are being taken.
Chairman, this is Ben Jackson with the Bankers Association. I'm on now.
All right, thank you.
Hopefully you can hear me. Sorry for the tech issue.
Alderman, hold on one second, Ben. Alderman, did you want to hear from Mr. Jackson first, or can we?
Sure. Ben can absolutely go first. I just also want to ask if they are participating and present, if the banks who have joined us today are interested in commenting on the initial analysis.
Yeah, and I want to, before Ben starts, I just want to thank Amalgamated, Associated Bank, BMO Harris, Bank of America, Citibank, Huntington, JP Morgan, PNC, and Wells Fargo. We had Fifth Third and Zions. They might have hopped on late, but let me have Mr. Jackson speak first, and then we can hold that question just for a minute, and maybe he can kind of give a more rounded off answer for you. Go ahead, Ben. Thank you for jumping on again.
Thanks, Chairman. And again, sorry for the tech issues we had there. I'm Alderman Laspada. I'll just address your issue quickly. I think individual banks here didn't necessarily analyze other banks' data. They were presenting their own data under the RFP. And if you looked at the data portal where that information was uploaded by the comptroller and the treasurer's offices, it's pretty extensive. So all of the banks in providing information here had to provide very thorough analysis for what they're doing in home lending and other areas throughout the bank. And the folks that are on the call today are not necessarily specialists in those individual areas. I'm sure if you have a specific question about one bank or another, they can talk about it, but the overall analysis, they couldn't do individually. But, with that, I think, I appreciate the Woodstock and NHS presentations that kind of highlighted it. It's good for us to see too. And we are certainly very cognizant of looking at the data that is out there and tracking it and doing better. One figure that we've been following pretty closely the FDIC, which is the insurer of bank deposits in the country, has continually tracks the level of unbanked and underbanked individuals throughout the country. And we've been happy that during the pandemic, we're actually at the lowest level of unbanked and underbanked individuals since the FDIC started tracking that data. And that, a bank account means that households have greater access to safe and trustworthy financial services. And that can certainly lead to greater relationships, including mortgages, small business loans, et cetera. I'll go back to my remarks, and I think everybody's kind of covered most of what I was going to talk about. So I'll just be very, very brief. Again, I want to applaud the comptroller, the treasurer, Melissa Conyers-Irvin, and her staff, as well as Chairman Ostermann, for working with us on the ordinance that you see before you. And certainly we continually acknowledge the history of inequity in the city and throughout the country. But I think you've seen, some strides here that some banks have made. And I can tell you that every bank that's an IBA member that applied under this process is looking to do better, and not just better in the lending space, but better in terms of small business development, financial education, financial apprenticeships, and workforce diversity. And they're particularly focused on diversifying their executive suites and boardrooms. We worked with all of you to draft this.
Do other people have?
Yeah, hold on.
Ordinance. Did you lose me?
Yeah, just for a second. And maybe about 10 seconds there.
Sorry about that. All right. Tech issues continue. My apologies, Chairman.
No worries.
So I'll just wrap up here and say, we're eager to continue engaging. I think you heard from the comptroller and others that, they reached out to a lot of local banks. They're in smaller institutions. The changes in this ordinance, as well as the cumulative changes that have occurred over the last, 5, 6, 7 years through the municipal depository process, they really create a disincentive for smaller firms to establish a business relationship with the city of Chicago. But we do want to work with the comptroller, with City Treasurer Melissa Conyers-Irvin, and all of you to try and focus on the shared goal of equity, while also trying to reform this process to balance the goals of equity, as well as expanding the number of local firms that work with the city. So thanks for the collaboration.
Yeah, we froze up again there, Ben, but we thank you too for being part of the conversation here. All right. Just as a point of information here, ladies and gentlemen, I want to point out that we did send out, as Comptroller Sony mentioned, there was a link sent out to the Municipal Depositories RFP. And within that, oh, sorry, Ben. You froze up again. All right, he's just having a little tech difficulty there. But within that RFP link that we sent out, it's on the city website. There's about a dozen respondees with over 30 responsive documents. These are PDFs of their overall response, and then there are Excel spreadsheets from each one of the institutions that, if you would like to look at those individually, they have responsive information on there about the home purchase loans by census tract, residential lending for the year 2020. Some very detailed information on there that I think would be helpful to each of you to review of those dozen. I think it's about 11 or 12 respondees. So some of them have multiple documents in there on the website. So please take a look at those as you go through this. Alderman Laspada, did you want to say something again? Go ahead.
Yeah. Well, I asked a question before Ben's comments, so I'm glad to come back to it, and I'm glad to rephrase based off of the feedback that he was giving. So, I won't deny that the data is extensive and useful. The challenge is, of course, the analysis of the data. So I was looking at, for instance, some of the data sets that are on the Chicago data portal, and they look to be accurate. The thing is, unless you have a staff person who understands GIS, who has access to census tract and community area shape files, it is hard to get a meaningful analysis out of it. And I guess in a way that's what we may be looking to NHS and other like neighborhood housing partners on. But maybe I won't ask any individual bank to comment on the state of the banking industry from a general perspective. Perhaps the more reasonable question is the analysis that Woodstock and NHS put forward. Do you feel that this is reflective of your lending in Chicago? And if so, what are the corrective actions that you're looking to take as a bank? And then I have one question after that.
Alderman, do you maybe want to pick one specific bank?
I'll pick one specific. All right.
Because I think they generally, if you read through the RFPs and the responsive docs, I think it's generally the same. So do you have the list in front of you on the RFP page?
Yeah, I sincerely didn't want to single anybody out, but like sure, JP Morgan Chase, is this something that you would care to comment on?
Chairman, Vice Chair, and Alderman, thank you for the opportunity to speak today. My name is Jeff Senheimer, and I am the Managing Director for our government banking business at JP Morgan. I can't speak to the evaluation as Ben mentioned. It is not something that I have purview to, but we can absolutely come back to you after we've had a chance to look at it. Alderman, what I can speak to was a question around actions, right? And as I think you know, members of my team have met with you and others on this committee. We have five major bullet points that we are prioritizing in Chicago under our $30 billion racial equity commitment after recognizing homeownership and financial health gaps on the southwest side. And again, we can come back to you with very detailed information on this, but primarily it was to increase homeownership, expand our affordable rental housing, grow Black, Hispanic, and Latino-owned small businesses, increase supplier diversity, and improve our financial health and access to banking. Again, each of those subcategories have a fairly extensive path that we are executing on. And so if you'd like, we can come back to you individually after committee with details on each of those items.
Alderman Laspada, if I could add just a little bit more information as a result of all the work as a combination of WBEZ and your discussions about racial equity, the Advancing Inequity in Banking Commission that the state and the city treasurer are doing, and obviously the lending equity ordinance, it has brought these lenders like JP Morgan Chase and others to the table in a manner that we haven't seen in quite a while. We've had a number of discussions openly and privately about deconstructing the mortgage lending process and trying to figure out specifically, where are these road bumps? What's causing these disparities? Really trying to dig in, because a lot of it has been baked into a system that's been centuries in the making, and a lot of us just assume that's the way the process works. And we're coming to the table thanks to the leadership of the city treasurer, you and your colleagues, and even what's happening at the state and the federal level, has really given us an opportunity to reevaluate what we've considered to be normal and maybe embrace the process of creative destruction. So we're hoping over the course of 2022 to be able to come back to the city council and to your peers and to be able to show you the results, or at least the initial findings of, here's how we would rebuild this in a race neutral, if not in a compensatory manner that's going to help make up for some of the damage that we've seen over the course of the better part of a century.
Certainly, and to be clear, I did not mean to ask any kind of a gotcha question. Like this is a hearing about racial inequity in lending related to our municipal depositories. And so I tried to frame my question within that space, but I'll add just one second question. So we have a Chicago Community Land Trust in the city, which the goal of it is to create long-term opportunities for affordable home ownership. Currently, I am aware that there are only 4 lending institutions that lend to qualified home buyers within the Chicago Community Land Trust, and that is Wintrust, NHS, NLS, Guaranteed Rate, and Omaha Mutual. And so I'm grateful, very grateful for their participation in this program. I am wondering if there are other lending institutions who are with us today who either haven't heard of the Chicago Community Land Trust before or can explain what the roadblocks are to lending to qualified buyers trying to purchase our CCLT units.
Alderwoman Dowell, did you have a point of information or question?
No, I'm waiting my turn for a question.
Was that Mr. Simpkins then? Ben?
Yeah, Chairman,
Sorry,
this is
thank you.
Ben Jackson. Alderman LaSpada, happy to discuss that with you offline. I don't think that any individual bank is going to be able to, within the context of this hearing, provide the reasons why they aren't involved with that land trust. But reach out to me. We can certainly get a meeting together and talk offline about it. Happy to do that.
And glad to follow up with you. And if there's any lending institutions here who also want to follow up through the chair, I am fine with that as well. That's my time. Thank you so much, Chairman.
Thank you. Alderwoman Dowell?
Yes, thank you, Mr. Chairman. This question is to Mr. Mendez. You mentioned the deconstruction of the industry to find out where the obstacles are, where the roadblocks are. And I'm wondering if there's any consideration being given to the appraisal companies that work in these neighborhoods and how they appraise and the impact that might have on decisions that these financial institutions are making.
Yes, very much so. As a matter of fact, that's such an important topic in the process that the coalition of organizations that include Woodstock and the Neighborhood Housing Services of Chicago, that we call the Housing Policy Task Force, we actually have only one subcommittee, and that focuses on appraisal bias and appraisal issues. So that is a conversation we're having both on the for-profit and the nonprofit side with lenders, with advocacy organizations. But at the end of the day, we need to marry what the industry does and how they do it with what the experience is at the street level of the borrower going through the process. And those bridges aren't always intuitively in place. We assume they are, but they're not. So organizations like NHS has that kind of grassroots connectivity. Woodstock is much more of a research and academic institution. And then we marry that with the feedback we get from a number of institutions, including JPMorgan Chase, Huntington, Fifth Third, a variety of, including Providence and Guaranteed Rate. They're all at the table giving us as much information as they can. And we're making sure that it's a safe place to be able to say exactly what they think is happening and what the issues are, so we can identify priorities on how to do that. Anthony, do you have anything to add to that?
Thank you, Horacio. Yes, Alderman Dow, that's a great question. There are actually efforts underway to really comprehensively take a look at that. The Housing Policy Task Force, of which Woodstock and NHS are members, began looking at this some time ago. On the federal level, the OCC's PAVE initiative is actually sort of on a national level. This is one of the issues that they're taking a look at, this appraisal bias and undervaluation of homes and communities of color. The NHS and Woodstock are also in collaboration with CRN and some other organizations on a state level, Housing Action Illinois, and we're in conversations with IDPFR about some potential improvements to some of the state requirements on appraisals. that will also help get at this. We are actively working with Chicago Association of Realtors and others to begin to gather data and stories, actual experiences, if you will, related to appraisal bias and undervaluation. So we are in fact focused on that very issue. Yes.
I would only add that the leader on that task force is the Chicago Rehab Network. So they're one of the leaders on this. And then it just so happens that one of the leading academics that have done an enormous amount of data research and discussion about this appraisal bias issue just moved as a professor to the University of Illinois here in Chicago. Her name is Junia Howell. And I would highly recommend anyone interested in this to have a conversation with her or read her work, because it is an extensive volume of detailed data that really there is no parallel to it.
That's true. And just as an aside, we're also now working with Fair Housing, the Fair Housing Clinic at UIC John Marshall to get some additional academic support to look at this issue.
Ben Jackson, did you? Oh, sorry. Ben Jackson had his hand up too, Alderwoman Dowell.
Mm-hmm.
Yeah, Alderwoman, I just wanted to add, and I don't want to pile on, but this is something where we believe there's consistency with consumer groups and the industry that reform is necessary. That is one of the kind of issues outside of the bank that can be a barrier to obtaining a mortgage. And a particular problem is you have the appraiser industry that is a really kind of older industry if you look at the demographics, and you often have appraisers come from outside of the neighborhoods where they're assessing a property, not knowing the neighborhood, not knowing the community. And that's an issue that we want to work with these folks on the call to fix.
Right. I definitely agree with that. These two things are really tied to each other at the hip, and glad to see that there's some movement or at least some discussion on that. Mr. Mendez, the other question I have for you is, and Anthony Simpkins, I appreciate the level of detail in your data broken down by race. I'm wondering if the Woodstock Institute can apply that same lens or break down their information by racial categories so we can compare apples to apples.
Yeah, as I mentioned in my comments, and also we had provided a tremendous amount of data to Anthony and his team for his presentation. We wanted to do a little bit of that management sandwich, the good news and the bad news a little bit, areas of improvement and areas where people are doing well. It's the holidays. I didn't want to finish the year off the way I started it. It's like beating up really important players in our community.
So that's what you meant.
Yeah, exactly. So,
okay.
But the bottom line, and there was a little bit of talk about this also with Alderman LaSpada, is that Woodstock and our partners, we have a tremendous amount of data. Now, the issue is, what's the data that resonates the most with the city council and your wards? And we can sit down collectively, individually, to be able to break down this data from a geographic standpoint, an income standpoint, a racial and ethnicity standpoint. So you get a really clear idea about what it says. As an economist, we heard, I learned through the variety of degrees that I got that there are three kinds of statistics: lies, and statistics. So we'd love to be able to break through all of the sort of interpretive stuff that may not necessarily be connected to reality, and make this data relevant to the city council, because you have some really big decisions to make in your role. We want to make sure you have the right data to be able to make those decisions with the truth, and happy to work with financial institutions and others to be able to make sure that the data we're providing is accurate and is representative of what you're seeing at the ward level.
Thank you very much for your responsiveness. Thank you, Mr. Chairman.
Thank you. Alderman Sigcho Lopez.
Thank you, Chairman. My question, and I don't know, maybe through the treasurer or anyone who maybe has this data, but I know during financial crises, we saw that in the last housing bubble. Community banks actually were, in a way, hurt, and community banks, of course, are where many of our small businesses, maybe or some of our most vulnerable communities land or borrow. My question in that line is that, do we have any data in terms of, and I heard from the panelists different options, but reality is that the money is not triggering and loans are not triggering to the people needed the most, small businesses and Black and brown homeowners. I think that, looking at different models, I think that having large commercial banks oftentimes does translate with lack of accessibility for different reasons that we heard it today. Do we have any data around community banks and that, what option is that and what as a city we can do to incentivize that, if that is a good route? And again, I will re-insist on another point, but a little later because that's a more complex question. So let me start with that question around community bank.
And this is Reshma, I can take that, Alderman. So the way the process worked and the way the ordinance works is that if a bank is applying for being on the municipal depository list, then we would ask for the data. So if the bank didn't apply, then we don't have access to that data or information that they would apply. I think the other thing is that a lot of the smaller banks, and someone can correct me if I'm wrong from the team here, but a lot of the smaller banks are not required to fill out all of the HMDA requirements just because they're small and they wouldn't have the capacity. A lot of this work is labor intensive to put together. And so that's why we probably see larger banks responding. But the data that we have is for the 11 banks that responded. And I don't think we really had any community bank respond besides like Amalgamated or Zions Bank. So we won't have that data on hand.
So then a follow-up question is, how can we incentivize, community banks to apply for incentives, right? How can we incentivize smaller banks or, that or entities that are actually serving, but perhaps don't have the capacity? So that might be the follow-up question.
So, I think the treasurer had mentioned this at the very beginning, but just to reiterate that, one of the goals of the task force that the treasurer's office has put together and, working with the state, working with our office and many other community outlets, is that we want to figure out how to streamline this. And I don't want to speak for the treasurer. I know that she could speak more eloquently than me, but one of the goals is to get those smaller banks to come into the task force and tell us what's holding them up. What are the barriers? Is it, processing? We ask for a lot of paperwork to be able to ensure that the banks are meeting all of our requirements. What can we reduce in that? That we still meet our goal of getting the information we need to make sure that they are a valid municipal depository, but we're not making it so burdensome that they're spending weeks and weeks trying to fill it out. So I think through the task force, which is already active and will be working over the next few months, we should be able to get more information to figure out how to incentivize those banks to apply.
And Alderman, to your point, and certainly the comptroller said it best, so I'm not going to be redundant, but to your point, we have to figure out this process over 50 years old. What is it that is restricting banks from applying, the banks that we want to apply? It's gonna take us some time to figure it out, and I know we're all impatient, right? And every time we see this data from the Woodstock Institute, it just makes us rise up even more, right? It's like, it's just steady digging at us, and we're just trying to figure out, because we do want to balance it. We know the city wants its money protected, and we have to be fiscally responsible for our residents. But then on the other hand, we're like, but we gotta be able to have these banks lend to residents. So how do we figure this out and that balance? And that's why this is the beginning of many discussions, because at some point, and I think Mr. Mendez said it best, the city council is going to have to make some difficult decisions. And we're gonna do a lot of research on it, right? And we're gonna work with the partners, NHS, Woodstock, to do that. But at the end of the day, the city council is going to be presented with some tough decisions and that we'll need to make. So very good point, well taken. I think there's more discussions to go.
Thanks, Treasurer.
Thank you. And Chairman, and I think the Treasury covered. I'd love to see how we can incentivize that and reduce the barriers for community banks to have an access to that. I know we have small homeowners and small businesses who are really struggling in the middle of a pandemic. They cannot lose their home. They cannot lose their business. That's a loss for all of us. So I hope that we can figure this out together. I'd like to be, maybe part of these efforts, and also maybe at some point have a public option, because the reality is that, no one is lending to the poor. No one is lending to the people who need it the most. And I think as a city, we need to act. Thank you so much, Chairman.
Thanks, Alderman. Alderman Moore.
Good morning, Chairman. Thank you. First of all, I know you did say you were going to get the PowerPoint that Anthony did out. Has that been sent out yet, or is it on its way out?
That is probably, I don't know. I'd have to check, but I'll make sure I get it, as soon as possible after the end of the meeting if it hasn't gone out.
Okay. And number two, I don't know if Mr. Jackson is still on the phone or the gentleman from Chase that spoke. All of them talk about equity. I need to understand, what is equity to them?
Mr. Jackson is still on the call. And
Hi, Alderman.
Mr. Senheimer, I think, as well.
Just broadly speaking from the industry standpoint, I think that individual banks in forming their concept of equity went to community groups, and banks worked with the community groups who are represented on this call, as well as neighborhood groups throughout the city and the country. So these are not, corporate formulations of equity. They're looking at the community and also to regulators, state and federal regulators, as to how to define that. And, one thing I didn't mention in my remarks is that this is something that is now, we've seen in the last 18 months, new announcements from many of the banks who are applicants in this process to really put equity goals into not just, some segment of the bank, but holistically adopted throughout the organization, meaning their performance measures for business lines and executives throughout the company to ensure that equity goals are just as important as everything else, within the bank. So, it's different for each bank, but those are formulated from discussions with community organizations and groups.
Okay, and that's the part that challenges me, or concerns me, should I say, because without fully knowing what equity is, we don't even know sometimes the goals that we're setting. So when we talk about it, and I heard somebody mention making sure that you use the word equity in the what you call the A suites or the top suites, whatever term you used, but at the top and upper level management, I believe that that's part of the problem. And when an individual cannot define it, and I understand talking to groups, but that's because you need, in this case, really Black leadership in those rooms at your banks, who are given the responsibility to go out and really perform, not just be a face to say we did community engagement. I don't need another community engagement officer. We need someone that is Black, that is up at the top, at the table with some decision-making authority. And until we begin to see that across the board at these banks, then I'm gonna assure you that there is very little that's going to be accomplished. And so let me address that question first. How are you all addressing that issue and making sure that there are Blacks in leadership authority with the ability to really have some teeth to make sure that we move in the direction that we need to move in?
Alderman, let me let Alderman Ostermann jump in as well. We did, I think, have this discussion in Housing Committee, but he has to leave, and I think he just wanted to make a comment to that as well. Just popped off there. Alderman Moore, I think Mr. Senheimer was on the call. He, I believe, started to address this, but maybe might be able to add something there about the 5 points that they were talking about in terms of equity.
Sure, Chairman and Alderman Moore, thank you again for the opportunity. This would be another area, Alderman Moore, I'd like my team to come back to you on for some very specific details. But the expansion of both Black and Latinx leaders in our firm is a top-down initiative from Jamie Dimon, who's our CEO. That includes both from top down and from our standard employees on their way up. An example of this would be the Fellowship Initiative. It provides intensive academic leadership training to young men of color from our low-income communities, and it helps them get opportunities within the bank. This program was introduced in 2014 in Chicago, actually, with a cohort of about 40 fellows. It's grown to over about 60. And so that's Alderman Moore, one example of how we're trying to grow from both top down and bottom up to bring Black and Latinx employees into our firms to address the items that you mentioned.
And Mr. Chairman,
yes, Treasurer.
to address this. Okay, so Alderman Moore, that is a great question, and we talk about the C-suites all the time. As a matter of fact, in the Advancing Equity and Banking Commission, the AEBC, that I partner with State Treasurer Ferrix on, JP Morgan Chase, for example, you just heard from them, they are on that commission. And that is one of our pillars that we are measuring the institutions for, because that is important, right? It has to start at the top. And we have to know, where is the equity? Where's the diversity in the C-suites?
And Ben, you want to answer that as well, Alderman Moore's question.
Thank you, Chair. Alderman, again, great question. You've heard from Chase, and I was actually going to refer to Madam Treasurer and the great work that's being done in the AEBC with her office and State Treasurer Freric's office. One thing that's very important that's happening there is a lot of information sharing on how best to tackle this very important and serious problem within the banks. And they just completed rounds of discussions, including discussions about that topic, and are working on analyzing the information that they receive from this collaborative approach from major banks in Chicago working on this. So once again, kudos to Madam Treasurer on driving forward with the AEBC on this topic.
Okay.
And then, Alderman, hold on 1 second. To add to that, Madam Treasurer, do you have a report that would be coming, a date on a report that would be coming out? I thought you had mentioned it in a previous meeting, but I don't.
Yes, thank you, Mr. Chairman. I didn't want to jump back in and speak, but I did want to mention that. There is a report that is going to be coming out, I think the second quarter of 2022. We are having so many meetings with all of these banks right now. I mean, it's just a lot. When being said a lot of information sharing, it's kind of like these large PDFs that you're seeing on the city's portal and the Department of Finance website. So we're analyzing all of that, and we are going to be reporting out on it. So I think that AEBC, Municipal Depository Task Force, the work being done in this committee, the work being done with the Committee on Housing and Real Estate, it's a combination. We really have to join forces, which is what we're doing. And we're all just really taking a bite at the apple in many different platforms. So just kudos to everyone for everything that we're doing. This is such a big problem that is taking all of us to do it in so many different ways. But yes, a report is coming out the first part of 2022.
Okay. And the second part of that question, if it can be considered a second part. So there's two extremes. It's the one I just asked about at the top level. And then I'm going to the next extreme, because everybody, the question keep coming out, how do we close that? We have to think differently, and we really have to get at the grassroots level. I appreciate everything that Anthony Simpkins does at NHS, but I think it has to go even lower than that. When you have organizations, say like in Inglewood, Resident Association of Greater Inglewood, whose focus is on buying the block. When you got an organization in Auburn Gresham, like block by block, different realtors and just different people that live in the community who is interested in, making sure home sales are happening in their house and they're reaching out to people. What has to happen is that top person, that top Black person or that top Latino person that you're talking about has to be down at the community level working with these people who are directly working with the residents, because even at the NHS level, so much get missed. So how are we looking at making sure we get all the way down to the grassroots level with organizations which you may or may not heard of, RAGE, Resident Association of Greater Inglewood, and Auburn Gresham, block by block? How are you looking to propose to get down to that level to reach those people who know the people that can and are willing to carry mortgages, or even small business owners who are looking to get businesses but are getting rejected for loans? How are we getting it down to that grassroots level?
Horatio, do you have an answer for that?
Well, probably one that may be somewhat uncharacteristic. Being relatively new to Illinois and Chicago, I've reached out to a number of different organizations, including banks, to be introduced to a lot of the more impactful or some of the highest performing grassroots organizations. And in many cases, I did have an opportunity to be introduced to organizations like RAGE and others. And the introductions happen as a result of the community outreach people at financial institutions. So I think the idea there is to translate what may normally be a philanthropic or an outreach relationship into something that gets put into the DNA of how a bank does business and with whom. Because it seems like each of the institutions I've partnered with in these intros, be it PNC or Fifth Third, Huntington Chase, all these others that were more than happy to show me certain communities that were priorities of theirs. They really knew a lot of those grassroots organizations really well. And I had to scratch my head, probably as you would, saying, so why isn't more happening as a result of those relationships? And maybe that's that differentiation, as you said, of we don't really need more community outreach people. We need people going into these communities really trying to figure out what do they need and how can we provide that in a manner that provides a margin that makes it business as opposed to a handout. I think maybe the answer resides in that process. I'm not sure, Anthony, if you would add anything to that or if any of the bankers have something to add to that.
Yeah, actually, I would like to add something to that. And to Alderman Moore's point, this is actually the reason why we have Community Development Corporation, CDCs, and Community Development Financial Institutions, CDFIs, which is what NHS is. So when it comes to working with RAGE and Teamwork Inglewood, for instance, and folks block by block in Auburn Gresham, folks in South Shore, in West Humboldt Park, and all the neighborhoods that we're at, we are on the ground with these people, right? Just met with Aisha and Cecile a week ago, right? And the community development folks from these banks, many of them sit on our neighborhood councils that we have worked with the residents in the neighborhoods to put together so that the residents can work together to come to a consensus of what the community's needs are, so that we can then help figure out what are the programming and resources for those needs and communicate those needs to our banking and lending partners as well. I think what we have a good system in is how to connect our lending partners with folks on the ground, Alderman, like you're saying. What has not been put in place is how you translate that intelligence and those relationships into real programs that help the folks that you're talking about. That's what hasn't been done. You get a CDFI like NHS, who's much better at it than a national bank. And so I think part of the solution is making sure that the national banks, and when we had our first hearing, Congressman Quigley talked about the importance of CDFIs in making that translation of understanding and working with the people on the ground, and then working with the these national lending organizations to make sure that we understand what are the mortgage products, what are the programming, What are the target communities? What are the issues that need to be addressed? Whether it's folks that don't have access to banks to put together accounts, it's the kind of small business lending that's needed. Small businesses, oftentimes what they need is working capital, as well as operating capital for nonprofits. It's translating those needs into real programming. NHS can do some of it, but our banking partners, our lending partners are much larger, and so have to be part of that solution as well.
All right, thank you. And then my last comment is for the banks, when you're setting your goals and you're talking about equity, don't get excited as I know Alderman Ostermann said, it's going to take some time, but don't get excited when we've moved up the numbers and we go from, in non-minority communities, you may do $50 million worth of lending, and you said, okay, in minority communities, you do $50 million worth of lending, then in a non-minority community, you may do 60 million. You say, hey, we're getting better, we're getting close. That equity piece is because it's been, and wealth has been lost for so many years. You all almost have to focus on really pushing those numbers much higher so that down the road, when we're looking at numbers in minority communities, they should be heavily outpacing non-minority communities. In other words, keep this word in your mind, in your head, as you all do everything.
Thanks, Alderman.
Intentional about what you're doing, how you are making sure that you're growing and reaching equity. And so with that, Chairman, I thank you for this opportunity to ask the questions. I thank everybody for being on here. I want to really thank Melissa Conyers-Irvin for her leadership, and everybody who is on this and willing to try and work towards this. So, because at the end of the day, we all know what happened with COVID. We know all what happened with George Floyd, and everybody said they wanted to do this and do that. And now people are like going back to normal. What we were at wasn't normal. And I am not going back to what was. And so I'll definitely be continuing to watch, and I'll continue to hold people accountable, because we have and we must do better. Otherwise, what we've seen is going to continue to get even worse. Thank you so much.
Thanks. Alderwoman King, did you have a comment? All right. Seeing as we have no further questions on this item, I want to thank all of our speakers and our bank attendees. I know that we have a lot of work to do here, and appreciate all the aldermen with their input and taking a look at these RFPs and the Excel spreadsheets. I know it's a lot of information, but hopefully as we move forward and make adjustments from what we've seen in this first round of responses and what we need to do to get the smaller institutions to the table. I appreciate all the organizations here, the Illinois Bankers Association, Woodstock, NHS, and of course, all the individual banks that attended today. And Alderman, we will forward any information that we receive from them to each one of you for your perusal. And then I also want to thank the treasurer, the comptroller, for their continued work on this, and with the task force, moving forward to really get these institutional changes done that each one of you have spoken about today. And again, I really appreciate the input from our local organizations, Woodstock and NHS. This is very helpful to, move these issues forward in a substantive way for the first time in decades. So I think this is fantastic. And with that, I'll give you all a moment to move on to the rest of your day, and we will move on to our second agenda item. Thank you all.
Thank you.
All right, ladies and gentlemen, as they're exiting out for that first section, we set up for agenda item number 2. I appreciate everybody's input on that. And again, if you have any additional questions, I know the comptroller and the treasurer will be definitely happy to answer some of those questions. Moving on to the second half of the finance agenda, we have a resolution from Alderman Raboris and other aldermen regarding a call for a hearing on impact of property tax distribution on commercial corridors and economic recovery. Another one of our favorite discussions, property taxes. I'm going to let Alderman Raboris, if you'd like to speak first, that's fine, or if you want to wrap up. We will also have Cook County Assessor Fritz Kagi answer questions from the aldermen about the resolution and all of our concerns with property taxes and the system that is in place or will be in place. So Alderman Raboris, did you want to make a comment, or would you like to just hold until the assessor speaks? All right, let's see. We'll go ahead and let the assessor discuss we have a resolution here that was sent out to everyone. But I think the issue is having the assessor explain to us how he gets to fair assessments, or what we think should be fair, and how homeowners and commercial properties come down under this system that's in place. And Assessor Fritz Kagi, are you ready?
I am. Thank you, Chairman Wagesback. Hi, everybody. Good afternoon, or I guess we're still in the morning. Thanks for the invitation to speak to the Finance Committee today. I'm here.
1 second, Assessor. Can everyone hear him?
Yeah.
We are just fine.
Okay, excellent. Thank you. All right, go ahead, Assessor. Sorry about that. I want to make sure everybody can hear you.
Sure. We're overcoming a lot with the technology. Thanks for checking it out. So I'm here to present an update on my work reforming the Cook County Assessor's Office. I appreciate the opportunity. This month, we released a new comprehensive analysis, which is called a sales ratio study by the International Association of Assessing Officers. It's called the IAAO, and it's the gold standard in our field. It examined the assessments released in 2019, covering the first third of the county that was reassessed by my office. The study finds that the 2019 assessments in the northern suburbs of Cook County met all 3 of the IAAO standards for accuracy, uniformity, and equity. The study also examined the effects of appeals on those assessments at our office and at the Cook County Board of Review. These studies are the best way to know whether an assessment system is fair or not. The IAAO study says that our reforms led to more accurate, uniform, and equitable assessments than in the past. Fair assessments are the first step to ensure no one pays more than their fair share in property taxes. Now, on that measure, we're delivering what we promised to Cook County taxpayers. It's the first time in memory that a reassessment has been within these standards, and we're proud of it. The 2019 assessments were reflected in tax bills received in 2020. Because our assessments were more accurate than in the past, many 2020 residential tax bills went down. Many residential tax bills decreased in 2020. The residential tax bills that did increase averaged only 1% that year. It's the slowest growth in many years, while commercial property tax bills increased an average of 15% during the same period. It's important to keep all of this in mind as the committee considers the text of Council Resolution R 2021-1302. The resolution not only misstates several important elements of the property tax assessment process, but could also result in Chicago residents paying hundreds of dollars more in property taxes each year. As I know you care deeply about the tax bills that face your constituents, I want to offer my perspective on these matters. State law and county ordinance direct us to assess residential and commercial property at the price it would sell for in an open, free, and fair transaction. Assessments under Illinois law are used to divide up the burden of local government tax levies. The tax levies are predetermined by taxing bodies like you, and they have to be paid. Assessments are about who pays what share of those levies. That's why we do assessments, not because they're fair, but that's how we divide it. Not because they're fun, but that's how we divide up the burden amongst us. The resolution filed on November 17th focuses primarily on commercial tax bills of large commercial property owners in the central business district. Property tax bills are now being calculated based on more accurate assessments, which has caused some commercial property owners' tax bills to increase an average of 8 to 15% based on data from the Cook County Treasurer. While this may be a cause for concern among these property owners, the IAAO study demonstrates that we are assessing properties much more accurately. To do otherwise would not only violate the state property tax code, but would cause homeowners, your residents, to pay more than their fair share of property taxes. Cook County ordinance does require that the assessed value of commercial property be set at 25% of market value, with residential property set at 10%. This law is what commercial property lobbyists mean when they say commercial is taxed more heavily than residential. While true, that policy was not created by my office, and it's been the law for decades in Chicago and in the suburbs. Research by the Chicago Tribune and ProPublica, the Civic Consulting Alliance, and the International Association of Assessing Officers, the IAAO, they all confirmed that prior to my administration, large commercial properties were underassessed. Those underassessments put more of the property tax burden on residents, homeowners, and small business. We have improved the procedures and, where possible, have improved the data that we use to assess residential and commercial property. The packet you received in advance of this hearing contains articles from Crane Chicago Business, which also confirmed the accuracy of our assessments and the positive trends in this direction. Because of more accurate assessments, reports from the Cook County Treasurer confirm that nearly half of all homeowners in the city of Chicago saw a decline in their tax bill this year, even as the city raised its levy. To engage in favoritism and reduce commercial property assessments below their market value, as this resolution suggests, would not only violate the law, but would cost some residents up to $1,000 a year more in property taxes each year. That's right, $1,000 more a year on your homeowner. It would also reduce stability and predictability in the assessment system. As I've said to many of you in the outreach sessions that we held earlier this year, instead of pitting one group of property owners against another, I want us to work together with you on long-term property tax reform, like increasing federal Title I funding for schools, passing state legislation to get an accurate snapshot of the data we use to assess small businesses, and creating a more progressive 21st century system of taxation that removes some of the burden from the brick and mortar properties that give our communities their character. Thank you for your time, and I'm looking forward to your questions.
Thanks, Assessor. First question from Alderwoman Smith. Or actually, Alderwoman Smith, hold on a second. Aldermember Boris, did you want to speak first since it's your resolution, and then I'll also have you wrap up?
Yeah, I'll speak real quickly. I want to thank the assessor for being on. Thank you, Chairman. And Assessor, the reason why I did this resolution is because of the calls that we're getting. What we're getting from large building owners and is that their tax bills are higher, and also their assessments are going higher. So they're projecting a higher tax bill in 2022. How do we address that? Is that correct? That's all I'm asking.
Well, I would expect that would be correct, because we're getting a better snapshot of what the building values are in the assessment system. So Cranes, they took a good look at the buildings that we just reassessed downtown. They said in that article that we showed you that not only were our assessments much more accurate, but they're actually a conservative estimate, that they, if anything, they could have gone even higher. And Alderman, I'm really glad you asked the question, because we always have to remember that there's a flip side to this coin. If we're undervaluing buildings, those big buildings like we have, like all those studies have shown, by more than 50%, there are millions of people in Chicago who are picking up the tab for them for that undervaluation. Homeowners, and not only homeowners, but small businesses in your communities. You know, these studies that were shown by the IAAO did, looking at all the commercial transactions that happened in 2018. You know, we've heard a lot about how residential assessments are regressive, that the small property tends to be overassessed versus the larger one. it found the same tendency in commercial properties too. That meant that the further you got out in the neighborhoods, the smaller their commercial property got, the more likely in the past they were to be overassessed. But the more downtown you got, the bigger the properties they got, the more underassessed they were. And so that meant homeowners, millions of people were picking up the tab for these big buildings. So we are seeking to get an accurate snapshot of all the building valuations so that the system's more equitable. And the data shows that we're heading there.
So with time, will this level out at one point in the future?
Well, Alderman Raboyris, when I came in office in 2019. And the first area that under the law we got to reassess was the north suburb. The second was last year in 2020, we reassessed the south suburb. So this is really only the first time that we're reassessing the city of Chicago under my administration. It affects tax bills next year. So that's a 4-year lag from when I came into office until Chicagoans get to feel the effect of the reforms, the more accurate assessments that we have in place. So it's a long time to wait. I think this would be the biggest change this year in Chicago because we're resetting the values to getting an accurate snapshot of where the markets are now. And I wouldn't expect to have as big changes in the future as we've had this year. Except for maybe 2022. Well, yes. So we reassess in 2021. Right. And that affects tax bills in 2022. So the change in assessment is most notable this year, and then the change in bills would be most notable next year.
Okay, thank you so much. Thank you, Chairman.
Alderman Boyers, I'm going to have you wrap up at the end, if you can. All right. It's an important topic, and I know we went back and forth on dates, but I felt it was important to get your resolution heard here, as before we go into the new year.
Thank you, Chairman.
With those bills coming out, as you mentioned. So I'll have you finish it off. Thank you. Alderwoman Smith.
Thank you very much, Mr. Chairman. I'd also like to start by asking that my name be included in the roll for purposes of the quorum.
I have that. Thank you.
I do have a question. Assessor Kagi, I've always found your work very refreshing because when we seek fairness, that is always the hardest word that there is, right? Because everyone tends to think that the thing that doesn't benefit them is unfair. And the true test of fairness is when everyone is in fact paying on the basis of the same set of rules. So trying to get everyone to a same set of rules is as close as we can get to fairness. And I really appreciate your work. I do want to ask you about something that is perceived as unfair in many communities as well, which is land banking vacant storefronts. We and many other communities have had persistent problems over the years of landlords who own their properties for a really long time and don't take the effort to rent them because either they have significant holdings and don't need the income as much, or more importantly, they are getting, they have in the past gotten a break on their real estate taxes for having vacant properties. And I know you and I discussed this many times before you came into office and when you came into office. And I believe that you've made some changes to the system. And I was wondering if you could explain those changes to make it more fair and to encourage landlords to rent their buildings.
Thanks for asking, Alderman Smith. You were one of the many leaders, and not only elected leaders, but also community leaders, people representing neighborhood chambers, people who are with nonprofits involved in the community. All of you called attention to the fact that the past policies of the assessor's office seemed to incentivize vacancy. That if you kept a property vacant, land banking, as you call it, some people call it stashing property, that you could get your assessment reduced by up to 90% if it was kept vacant. Of course, in the market value for a building that goes 100% vacant does not fall 90%. It would fall by some fraction of that. And it does so much harm to those corridors that we're talking about today. I grew up on the South Side. I treasure these corridors that I grew up with, and it really hurts me to see when corridors like 71st Street had so much vacancy, and there are all so many other good businesses good faith businesses staying open that were hurt by the lack of foot traffic that they deserve to have go by their properties. When you have that vacancy, it hurts the values of neighboring properties, it hurts local employment, it hurts vitality, it hurts sales tax collections, it forces us to rely more on property taxes. So what we've done, and we put this policy into place last year, is represent what market behavior is really like. If we will give credit for the neighborhood vacancy rate for every commercial property on that corridor, whether it's 100% occupied or not, because a reasonable buyer would have a margin of safety, assume there'd be some vacancy that would represent the local average at some point in the future. So we give credit to every commercial property on that corridor for the vacancy on that corridor. And then if someone claims additional vacancy, we will give them credit for a fraction of that additional vacancy temporarily. And as you've told us, and as many others have told us, this is helping to reactivate spaces where previously people had an investment strategy of keeping spaces vacant, stashing them, hoping to make their profit on the back end when they resell the property. Now this is helping to encourage occupancy of space. And we appreciate you and so many other partners here on the call for helping us to bring about that change we put into place last year.
Well, I want to thank
Point of
you.
information, I'm sorry.
Yeah, go ahead.
No, Alderman Moore, go ahead. Point of information.
Thank you. And thank you so much, Chairman Smith, for your question, because that was going to be one of mine. But I need you to just go a little slower. I got lost in that credit versus a portion of a credit. Help me understand that. So walk me through it. So a store has been vacant for years.
Yep.
Now, go slow. And then I got a store that's occupied. What are you saying happens with that store front that's been vacant for years because they've been stashing?
Thank you, Alderman Moore. So previously, the practice would have been to estimate the income of a property on that corridor. And then typically, if the property was 100% occupied, our office might assume very low level of vacancy at that property. If the property was vacant, the property owner would apply for vacancy. If it was 100% vacant, they might get a reduction of up to 90%, even though in the market, the price of that property wouldn't fall 90% just because it's empty. What we're doing, Alderman Moore, is we estimate the vacancy rate on that corridor. So for example, if we're talking about Halsted Street in Englewood, we'd estimate the vacancy rate there, and then we'd apply that to every commercial property on the corridor in estimating its income. So we'd estimate the income of all the properties on Halsted Street, but we'd incorporate the neighborhood vacancy rate on that corridor, whether the property is fully occupied or not, because that's what a reasonable buyer would do. Now, if a property owner is keeping it vacant and they claim that they're claiming relief for additional vacancy, we'll give them additional partial credit for the additional amount of vacancy. So if there was 30% vacancy there and they're claiming 50% vacancy, we'll give them credit for an additional half of the additional amount. So 10% additional on that, and we'll do it temporarily just for a couple of years.
All right, thank you. Thank you, Alderman.
You're welcome.
Smith.
Thanks, Alderman. A point of information. Alderwoman Smith. Alderwoman Smith.
Yeah, thanks. Sorry, I was still muted.
Sorry.
Yes, thank you, Assessor Kagi. This is really complicated, but we've already seen some results. And we are very, very happy that even that change in the rate is creating a movement in the market of people saying, well, I guess I better sell now.
And we're glad that it's having that effect. We're just glad that it better represents what is going on.
Yes, and a few other places, a few of our vacant storefronts have magically have tenants now. So it really gave an incentive to the landlords. We're beginning to see that. We hope that that's a flame that grows. Chairman Wagersbeck, that's really all I had. So thank you. Thank you again so much for your great work, Assessor Kagi.
Thanks,
Alderman. Thank you, Alderman. Thank you. Alderwoman Garza.
Hi, thank you, Chairman Wagersbeck. Thanks, Fritz, for all the work that you're doing here. I think my question's been answered, but I just kind of want to reiterate it. This resolution kind of criticizes you for increasing assessments on large commercial properties downtown. But I guess, how do these new assessments help the folks in my ward, right? The homeowners and the small businesses. I believe you've already answered that, but for me, it's like the big guys are finally paying their fair share, and then the folks in my ward are going to get some relief. Would that be a fair assessment? No pun intended.
Well, we can intend some puns on the day like this. It's pretty cold out there. Yes, Alderman Garza. We're all when it comes to assessments, we're all interconnected. That's the thing to remember. Homeowners, big building owners, small business owners out in the neighborhoods. We're all splitting up this pie, which no one wants to eat, which is the levy each year. It's about $9 billion that has to be collected in Chicago. And we divide that up as each property's proportion of the total assessed value in the city. And if there's been one group that was underassessed the most, and study after study showed that the biggest disparity in our assessments coming into this reassessment year was the underassessment of the very big buildings. By making sure that those big buildings are being valued more fairly, close to the mark in market value, just like everyone else's property is, that will reduce your homeowners and your small businesses a share of that overall pie in share of the tax burden. And so that will provide benefits to all those who've been picking up the tab for others who had assessments that were artificially low. That's why everything that we do is really intricately and inextricably connected with equity, because all of our assessments are interconnected. That's why it's so important to make sure that we eliminate disparities and distortions in our assessment system for every kind of property. That's why these studies, like sales ratio studies, are most important. And what they've shown in the areas that we've reassessed so far before coming to Chicago this year is that because we're valuing the biggest properties more closely to the market, that is delivering a benefit for the small businesses and homeowners in those places.
Right. Gotcha. Well, I really appreciate your work, and I look forward, you've always been looking out for the little guys. So I really appreciate that very much. Thank you. That was my question.
Thanks, Alderman Garza.
Thank you, Chairman.
Thank you, Alderwoman Sadlowski Garza. Appreciate that. And Alderwoman Austin.
Thank you, Mr. Chairman. Mine is just a little different than some of my colleagues. Chairman Wagasback, it would be kind of pretty much to you. So see, I've heard from some of the small businesses owners out by me who have received significant assessment increases. I do hope you will hold a hearing next month so we can hear from these small businesses. Some of them fear retribution from the assessor. I told them they didn't have that to worry about, but they are still fearful if they testify. So I hope that we can have a way for them to testify anonymously so that they can be comfortable with getting their voices heard. The small businesses are, for me, the ones that get hurt the most, because they're the ones that can least afford and they get assessed the highest. So if we can, sir, in your next round, if we can have it where, they can speak freely. Mr. Chairman.
Thank you, Alderwoman Austin. I think what I'll do there is, after we go through this hearing, BOMA represents the larger properties, I believe, and I'm not sure kind of at what level. Maybe the assessor can answer that, but typically when I think when aldermen are speaking about or to small businesses, we're either going through the chambers or maybe like Small Business Advisory Council. And I think what I can do is some outreach to them to see if individuals are fearful of speaking out, which they shouldn't be, maybe some of those other advocacy groups can speak on their behalf about what they're what they're sensing. And let me work on a new year, maybe in the first quarter date for additional hearings on property tax issues. And I can work through looking at the potential dates that are coming up with the assessor's office and others to pick a good time for that. But I'd be happy to do that.
Oh, real good, real good. I know they'll be glad to hear that. Just even on this Zoom call, I'm sure. But for the ones that I've had an opportunity to speak with, everybody's barely making it and scraping. So I feel for them because as homeowners, we're barely making it and scraping as well. So, but I know that we're not a big box ward, so I know I have to speak on behalf of the little guy, the small business, because that's all our ward is small business owners. Thank you, Mr. Chairman.
Thank you, Chairwoman. And I'll work with you on that to figure out when we could do a potential hearing on that again. And I don't mind having these subject matter hearings on these issues. I think it's important. So we'll, whether it's municipal depositories, as we learn more information and have to get it out there and share it with aldermen and some of these other either elected officials or bodies that participate in this, we'll work on that.
Okay, real good.
Thank you. Good question.
Chairman Wagasback.
Yes, go ahead, Assessor.
That's the Alderman's question, because I appreciate it. Alderman Austin, I think one of the most important things, there are several important things to realize here. First of all, we don't look at every commercial property as the same. We realize the incredible diversity in size and in neighborhood of every different kind of commercial property. Each functions within its own community in a very different way. And our mantra, since we've been in our office, has been focused on differentiating between the big and the small, differentiating between the ones that are downtown, the ones that are in the neighborhoods, and differentiating between neighborhoods. But what's going on in each different neighborhood is so different. And so we love to come out into your communities to speak with your local chambers to address their specific issues, which reflect the unique landscape of people in your community, Alderman Austin, and we're happy to do it. I just wanted to make a couple notes. First of all, one of the first things I realized when I came to this office is hardly anyone, including people who are participants of the real estate industry and people who are making tax policy, actually understands our system. And we want to educate people more that, for example, an increase in your assessment does not correspond to a similar increase or even directional change in your taxes. That, the assessed value base in Chicago is up over 40% this year. It'll shrink down a little bit with appeals, but anyone whose assessment is up, but well short of that 40%, will probably have a lower bill next year. Most people don't understand that. We want to connect with people in your community, especially your small businesses, to help them understand this. And the second thing to remember is that small business benefits when we're more fairly valuing the big buildings downtown. Remember, the biggest disparity in the assessment system that studies that have shown, but for example, by the IAAO, was that a lot of big buildings downtown were more than 50% undervalued. While a lot of commercial properties in your neck of the woods, Alderman Austin, were valued much closer to the mark. That meant that those small businesses were picking up the tab for the big buildings. So the subject of this resolution is about, is it okay for us to be assessing the big buildings just like we do homeowners and small businesses? And it's important for businesses in your community for that disparity to be addressed. And this is what we're doing. How do we differentiate between what goes on with the small businesses in your community and the big ones elsewhere? This has been our mission. We do it in several different ways. We're subscribing to every different commercial data source that we know. We've invested in analysts who can help differentiate better between what's going on in the neighborhoods and different sizes on the qualities and differentiate between properties on the quality spectrum. We've invested in more field staff to go out in the neighborhoods and see what's going on, see the differences. We've invested in technology so we can be more productive as our analysts and field staff go out there. We've sent out this year, this was the second year we did, we sent out a form to every commercial property owner so that they could report to us before we did the assessments on what they're experiencing when it comes to vacancy, when it comes to non-collection of rent, when it comes to declines in rents. And that helps us to differentiate what's going on in your neighborhood, Alderman Austin, versus what's going on elsewhere. We've also sought passage of a bill in Springfield, which would give us a more accurate snapshot so we could differentiate between that. And I can't help but note that the big building owners downtown have tried to thwart the passage of that law, which would help the small businesses in your community by differentiating what's going on Cicero versus what's going on Armitage. And that bill is very important, particularly for those small businesses in your community, because differentiation is the name of the game. The market looks at the values of those properties differently, and we should too. So I hear you loud and clear, Alderman Austin.
Well, thank you for that explanation. I think that, as you have said, it needs a better ABC explanation, because a lot of the small businesses don't really understand. All they understand is I'm hired.
Mm-hmm.
That's what they understand. I'm hired.
That's
so
right.
I think that, as I was saying, as you were saying, that if they had a better explanation, like I said, an ABC explanation, we're in kindergarten. So, then that way I can understand from henceforth. So if they get that, because the way I explain it to them, may be gobbledygook. But if you're explaining it because you're the one that's assessing, they will understand in a better manner. Now, if that can be done, I'm sure that they would, be very receptive to that. At least I'm hoping that they would. So, because the ones that I have, they don't want to say anything. They're afraid to say anything because they don't want to be retaliated against. And I told them, I said, they can't do that, just single you out. But, they have seen things that happened that they didn't believe would happen. But now that you've given that kind of explanation, I think that it would be most beneficial to those small businesses.
Well, Alderman, I will be there with bells on to be there with you and meeting with your constituents on this. And that offer goes out to every alderman here today. We do lots of outreach in your communities. We'd love to do more because I think this is best communicated when we're right on the ground in your community, hearing about the experiences that they're having. And I think outreach like that really helps to break down the distrust that you were talking about. People aren't used to thinking of the assessor as someone who wants to get things right.
Exactly.
We want to do that. That's why we sent out the forms to every commercial property owner this year before we sent out the assessment, so that we could get the number closer to the mark, so they don't have to incur the trouble and the fees that come with trying to correct it. We consider it a failure when our numbers are off the mark. So hear you loud and clear, Alderman. I'd love to be there with you and your constituents anytime.
Well, thank you. Thank you, Assessor.
You're welcome.
Thank you, Alderman Austin. And before I go to Alderman Rodriguez, I think you might need the assessor and his staff on the ground if you go through this measuring property tax assessment equity, or the Cook County sales ratio study that you also produced for us, and hopefully all the aldermen took a look at. Some of it's a little complicated, but I think it's important to read through that too. And it is available. That was, I believe it was sent out to all the aldermen a couple times. But with that, I'll go over to Alderman Rodriguez.
Thank you, Mr. Chair, and good to see you, Assessor Kagi. The fact of the matter is, I think you've been very clear about your office's efforts to be accurate, uniform, and equitable. And I appreciate your office acting in that way, even if it means some people might not be happy with that. That to me is leadership. That to me is what we need as far as elected leaders in our city. There are several things that I wanted to go through with you that I'm curious about, or I just want a little bit more context on. The first is on third-party independent analysis and reporting of the assessor's office. If I'm not mistaken, in 2018, the Civic Consulting Alliance did a study that found inaccurate and inequitable assessments, shifting the tax burden on working class people. And now we have the International Association of Assessing Officers giving you a gold medal for achieving accuracy, uniformity, and equity. I'm wondering if you can talk about some of the ways you went about achieving that standard and changing the office around.
Well, thanks for asking, Alderman Rodriguez. It was an all-in approach. The first thing that we had to do is make sure that we have good people in there doing this work. It is people that are designing, making modeling choices, that are valuing those buildings. We brought in people who are experienced people from the private sector, people who've been experienced assessors elsewhere in the country. We equipped them with better technology. We started subscribing to pretty much any commercial database that we subscribe to. We created a data science team to go in and do this modeling, to look for those anomalies, look for those disparities that were there before, to do it better. And we put all our models online so everyone could kick the tires, see how we're doing it, prove that we're using those models as we say that we've done. That modeling really helped on the residential side to eliminate those disparities that you were talking about, that the Civic Consulting Alliance found. It found that just a lot of modeling techniques were kind of lazy. They used average dollars per square foot across communities that were very different. And if you use an average dollar per square foot on the south side, you're probably going to end up under assessing the really high value houses and over assessing the ones that are further down on the price spectrum. And so really differentiating between condition and quality and neighborhood and all the other things that go into the values of homes, that was really important. That's what helped us to get some of those gains. And then putting the numbers out for analysis to test how our modeling are doing, and then put it up for a third-party study so that an outsider can take a look at this. All of this goes together. It comes with a lagged effect, Alderman Rodriguez. So the first area that we reassessed under the calendar that the state puts in place was the northern suburbs. That was 2019. Well, we did that in the south suburbs last year, and this year we're doing it in Chicago. So I know Chicagoans have had to wait. You know, we're delighted to be doing this work this year to bring the same changes that you mentioned to Chicago to eliminate those disparities that we've already been able to do in the suburbs.
And my understanding is the median residential bill in Chicago actually fell this year for the first time in a decade. Is that the case?
Yes, the median residential bill in Chicago fell for the first time in a decade, even in a year where the levy rose. And that was because the shift started to go in a more equitable direction in the city. And we also saw this in the suburbs too.
Now, I still have some homeowners who come in and do have challenges with being overassessed. I've seen some of those tax bills, but your office has been very willing to work with us on those individual issues. How do we get to more structural change so even things like that don't happen?
Well, so yes, when we are 230 people trying to value close to 2 million properties, and every property owner knows more about their property than we do, sometimes what we think we know is wrong. I remind my team, we remind all ourselves that we must walk humbly, that our assessments just statistically are going to be off the mark sometimes. And there may be systemic problems that we have to address that create problems. For example, the data that we have on quality and building condition is just not very good. And that tends to lead to a bias against homes that have not been renovated for a long time or are lower on the price spectrum. We've really tried to eliminate that bias, but we're investing in our field staff so we can get a better sense on conditions. We're trying to get a hold of data sets so that from the federal government that they have the appraisal data set that was talked about in the hearing before this one. There are lots of things that we can do to try to eliminate the biases that come in models that can lead to incorrect estimates being sent out that you mentioned, Alderman Rodriguez. But the other thing is we want to have a bunch of if things go wrong, we have another fallback. So if we send out an assessment, even though despite our best efforts and although it's being tested, we want to make sure that we have an appeals process that's open to everyone and that is easy. So we created online appeals. It's never been easier to do an appeal at our office than it has been now. Appeals are actually down for the third straight year. So we have more capacity to address those where our numbers were off the mark. We can really focus in our people on that. We've invested in a whole new computer system. You know, it was paid for by the county in 2015, but we put in place a whole new computer system that will allow us to have a better handle. The system will talk to other systems much more easily. We'll incorporate more tools, make it provide better service to those homeowners that you mentioned, Alderman Rodriguez. And we are very open-minded in terms of finding other ways to connect with folks in the community to get those assessments that are initially done more accurately. We always try to think about how are we serving the average person who doesn't appeal? Have we done the best job that we can for them? And that helps to orient our activity so that they're not troubled by some of the things that you mentioned.
And, you know, I've always thought it perverse that there was some sentiment out there from aldermanic offices that we didn't want to be more technologically savvy, particularly as it relates to seniors. Seniors are so very important. But why the hell did seniors have to reapply every so often for their automatic exemption? That makes absolutely no sense. And I think there's a perverse incentive for different electeds to be out there helping seniors apply for this, I guess. But why not just make that automatic? And I think we've got that accomplished, correct?
Well, yeah, yes, Alderman Rodriguez. Aging is a well-known biological process. We're not getting younger. It was a travesty that hundreds of thousands of seniors in Cook County had to go through the ritual every year of recertifying that they're still over the age 65. And the excuse that our legislators had in Springfield for putting us through that rigmarole was that the assessor's office couldn't keep track of who was moving or dying. And what we did is we worked with leadership in the General Assembly to show that we'd made the tech upgrades, we'd made an investment in data science so that yes, dogs and cats can live together. We can keep track of people who've died or moved. There are data sets that are kept track by the Illinois Department of Public Health, Social Security. We can subscribe to other databases to audit this well. And our legislators were wise in 2019 passing automatic renewal of the senior exemption. And so hundreds of thousands of homeowners have benefited the last 2 years in the middle of this pandemic from not having to come in to file those their exemptions to recertify that they're still over 65. So we're really proud of that. You know, people that I know in my life missed out on getting those exemptions some years because they had things going on in their life. And I know we have stories and loved ones who had those same experiences. And so we're really glad that the investment we made in technology allowed the General Assembly to push through that law that helped so many.
And the last thing I'd ask you about is just your office's efforts around transparency. I'm just curious to summarize some of the more salient transparency efforts from your office.
Well, you know, Alderman Rodriguez, there has been a legacy of mistrust in the system for a long time. When I came into this office, we found this scene. It looked like the scene at the end of the Raiders of the Lost Ark, where there were all those boxes going to the end of the horizon. So from Washington to Randolph, there was a whole floor stacked with 600 tons of paper appeals files. That was sort of a physical representation of the distrust that was out there, the inaccuracy, the incentives to appeal rather than get it right the first time. So to make the system more transparent, we've tried to flip it around. We wanted to reverse the legacy of us being seen as a black box. So we not only put our models online, but we wrote it in open source code so people can read it. They could view the data sets, they could run the models themselves. On commercial properties, we put all of our assumptions out there. So the big commercial building owners, if they wanted to know how they're assessed, they can look at our community valuation report on the South Township, which covers the loop, and they can see the dollars per square foot that we use to value the big office buildings with. And they disagree with it. Now they can see, well, this is what you assumed, and it was not right to assume that. And we're welcome to having data-driven conversations because we think transparency is really important for accountability, for showing our math. How did we get to these numbers? Because it makes us more accountable. People can follow the steps that we're doing. It makes people feel better that we're showing our math, but also when we're showing our math, if we are making mistakes, we can identify where those mistakes reside, and then we can figure out how to fix them. And maybe you find different data sources. If there's some other source of bias, we can see what's driving the bias. We can also identify a difference of opinion if someone is presenting another valuation opinion to us. So we think this is very good for building trust, accountability, and making the system work better.
Well, Assessor Katie, I think you've done a wonderful job. I think you should keep the good work. I think for any independent office, I think you've really been a model for transparency, for good government, for instituting best practices. And this is bore out through third-party independent studies. I think those are very important to have so we can make sure that we have experts looking at our independent systems and making sure they're working. And I thank you for doing your work. Keep it up, and we will continue to work with you. Thank you.
Thanks, Alderman. Thanks, Alderman Rodriguez. And we want to make everyone proud of this work rather than have everyone distrust us. And we're really proud of, we won a big award from the International Association of Assessing Officers this year for our public information, which recognizes the transparency. We won a big award from the National Association of Counties for the digital tools that we created. So this all goes together. We appreciate you noticing it, Alderman. Thank you.
Thanks, Alderman. Alderman Boris, how about if you close out your resolution here?
Thank you, Chairman.
Your resolution.
Thank you, Chairman Wagasback. I want to thank the assessor for being on live. I think we can all agree that this is not just about big downtown buildings, but about the tens of thousands of businesses, many small businesses, and the millions of people that work in these businesses. So it affects everyone here. I believe that we need to hear more from residential building owners and commercial property owners so we can keep this dialogue going. Thanks to you, Chairman Wagasback, and all our colleagues who spoke on this matter today.
Thank you, Alderman Boris. Alderman Sigcho Lopez, did you have a comment before we go?
Yes, very quickly, Assessor, just a quick question in terms of gentrifying areas. I see, like, throughout the comments, I hear, the system, still is a work in progress. We see the disparities for small businesses versus big businesses so far. And you've seen with the data, some of the data around the issue with speculation, especially around rapidly gentrifying communities and the displacement that it causes. Can you share with us maybe some of the ideas? I know that you have discussed and being proactive, and I really thank you for that. What are some of the recommendations maybe here as a council that we can take to help in these, I would say, externalities that are caused for small homeowners in heavily gentrifying communities? I know that you have talked about perhaps doing exemptions for small homeowners who keep their rents affordable and protecting naturally occurring affordable housing, or also, address vacancies and also incentivizing those who are helping their small businesses or tenants. Anything that we can do here as a council. I really want to thank you for your push to reform a broken system. And I think perhaps this is the time to ask for help. What we can do here at the council level to help you. This, I know, is the state and city and county. This is an intergovernmental issue. So what can we do to help?
Thank you, Alderman Sigcho Lopez. Really appreciate you asking about the issue of gentrification, which is one of the toughest problems we confront in the city. I know your neighborhood, your ward has really been at ground zero for a lot of that. First of all, I just remind that assessments are a lagging indicator. Assessments reflect market prices. And so by the time you see housing prices show up in assessments, the gentrification in many cases has already happened. Our policies have the most benefit to homeowners in rapidly gentrifying areas because if everyone is assessed fairly, then they're not having to carry more of the tax burden than they should. So the biggest disparity, for us coming in was in assessments for these very biggest buildings, making sure that they're properly assessed does reduce the load on the folks who've been really feeling the brunt of the effect of that gentrification, which has already taken place. But what's so important, I'm glad you mentioned it, is what we can do to make housing more affordable, to get ahead of this trend of gentrification. So, that assessments don't come around to reflect the gentrification that already occurred. First of all, in the first year of my administration, we did outreach to affordable housing owners to make sure that they were receiving the incentives that they deserve. A lot of them had incentives that had fallen off. We got them put back on. We worked with legislators to make sure the senior exemption renewed automatically. This had never been done before. It brings progressivity to a system that's kind of been inherently regressive. We worked with affordable housing organizations to help craft a bill to help identify those properties that are in the beginning of the process and help them avoid the appeals process. We've been working on a historic homes initiative with you, which would keep longtime property owners from being pushed out. We know a lot of the exemptions that are created under state law help to insulate homeowners somewhat from the effects of gentrification, but we need to find legal means to help protect the people who are most vulnerable to displacement, which are people who are affordable renters of affordable housing, to keep them in place. We want to explore with you and others how we can, under state law, to create an incentive for people to provide housing, affordable housing, below market housing for those landlords. We have revised our vacancy policy, which prevents commercial developers from keeping buildings unoccupied for years and paying lower taxes on them. Alderman Smith noted this before. This is really transferred more burden onto those businesses that were staying open. There was a strategy where people would, especially in communities like yours, keep a property vacant, stash it, hope to make value on the upswing in land value. Meanwhile, the neighboring businesses are really hurt by not getting the foot traffic that they deserve, and our system's leaning more heavily on property taxes than it ought to, not collecting the sales taxes that it ought to. We have an all-in approach to this. We are receptive to ideas from you. You've been really one of the intellectual leaders on things that we can do, and we embrace them, and we want to work with everyone on this committee to find ways to keep our residents in place, who really are the backbone of our communities, who represent that historical memory store of social and economic capital. Keep them in place, because we do know that markets have a tendency to displace people, and we don't want the assessments to reflect gentrification that already happened. We want to find ways to keep people in place before the gentrification happens.
Thank you, Cesar. And finally, Chairman, just very quickly, you touched already on the progressive nature of this reform package that we have put forward, right? Making sure that the big business, the people who have the ability to pay, and then of course that will by default subsidize some of the small businesses and small homeowners. Can you factor in? I know other municipalities take that factor, perhaps in maybe other national models that you've seen, where the ability to pay is at the core of this, because we've seen right now is that a 3-flat, that is brand new, where the rents have doubled, pay right now similar rents than the 3-flat that has not much of the property. Anything that can be done in order to push this progressive way of generating revenue and taxation for the city of Chicago. That's my last comment, and thank you, Chairman Wagesback.
Well, thank you, Alderman Sixto Lopez, for asking that, because we're in a really dangerous moment, because our economy is getting more and more digital, and brick and mortar is a smaller and smaller fraction of the economy. Yet brick and mortar has to shoulder all of the costs of educating our children. It has to shoulder so many of the costs of funding the city, while this growing digital economy gets a pass. I mean, we're doing this meeting on Zoom. How is Zoom helping us to pay for education of our kids in our city? This is a question that we need to ask more and more. I think we've got a couple different levers. The most important, actually meaningful lever, is to have the federal government expanding Title I. The city CPS gets about $300 million from Title I from the federal government, where its levy is about $3 billion. President Biden's talked about doubling Title I, which could really make a dent in the growth in levies for schools. So I think that's the biggest lever that I know of immediately on the horizon. Let's keep pushing that. The more the federal government can help to foot the cost of educating our children, which is a wonderful investment for the federal government to be doing, after all. This has been a part of the vision of our federal policy for 50 years. That's one less dollar that we have to do to collect from all the different kinds of property owners that we have in the community. And we don't want our shifting economy that's getting more digital to stack more burdens on those businesses and those people that add character to and employment to our community. Similarly, we are dead last in the United States in this state for our state helping to shoulder school districts with the cost of educating children. About 25% of school budgets comes from the state. Our neighboring states are closer to 50%, including Indiana, where they have a county income tax that helps to shoulder this. I think a county income tax is the kind of thing that can tax digital activity just like brick and mortar activity. So we need to find progressive tools like that to help shoulder the cost of education, because that's what makes property taxes high, is that so much burden rests on school districts and they have to tax property to fund themselves. So these are the kinds of more progressive things that we could do. The last thing I wanted to note, because this was part of the resolution, this notion that having a higher rate on commercial, the classification rate on commercial than residential is somehow unfair. The Lincoln Land Institute took a look at the top 53 cities in America. 40 of them have a higher rate on commercial than on residential, including a lot of cities that have a higher differential than we do, like New York and Boston and Denver. So I think it's fair to have the progressivity that comes from our classification system. I think we should be funding schools more with income taxes rather than property taxes, because that reduces the burden on everyone, the big building owners, small property owners, and residents alike.
Thank you, Assessor, and thank you for working with us to the adjustments as well for issues that we have in the ward. And thank you, Chairman.
Really, thank you, Alderman. Happy to do it.
All right. Well, I really want to thank Alderman Raboris for bringing this resolution today. I think it's very important to hear from the assessor on all these issues that aldermen often bear the brunt of, speaking to residents and businesses about their tax bills. And I think this helps kind of explain a little bit more of what you as the assessor are doing to hopefully blunt the cost on them. And I really think this is very helpful to us to have a county official speaking to us in this forum. We should actually have a lot more of them coming forward from the county, from the state, speaking to us about what impact their decision-making has had on city constituents, taxpayers, and the elected officials here, which we don't often get in these forums. The education you provided today, the information, especially this third-party independent IAAO report, is very helpful. Seeing your accuracy that you're working on, the equity that you're working on, and even with the errors that have come out on occasion, trying to fix those to make sure that you are correcting course whenever you see something come up is important for people to know. So I want to thank you for being here today, Assessor, and sharing with us this information that you have. And hopefully we'll see you in the future, to kind of discuss things as we move ahead. So thank you very much.
Good, Chairman.
Thank you. And with that, ladies and gentlemen, I know we have a meeting in about 20 minutes. I have a motion to adjourn from Alderman Austin. All those in favor say aye.
Aye.
All those opposed? In the opinion of the chair, the ayes have it, and the motion carries. This meeting is adjourned.